Good afternoon this Thursday, October 23rd. Well, with all the chaos, I figured we'd stop, focus on the cattle market, try to make sense of what all this Argentine imports mean. President Trump does not do a very good job, obviously, of tweeting and texting. He didn't say it right. Yes, cattle prices have elevated since he put the tariffs on Brazil when he was mad at President Lula and what they were doing to their former president. He felt like was himself being persecuted all over again. So he threw the 50% tariffs on Brazilian beef. That was a significant event, and most people are forgetting about that. And it's surprising to us why he hasn't pulled those tariffs off instead of talking about Argentina. But he has his agenda right now, and that's trying to save Argentina, which pretty much was falling into oblivion if it wasn't for the $20 billion in currency swaps we stepped in to help them. But of course, we were hurt by the 7 million metric tons of beans that Argentina was able to sell quickly to China, because they took the taxes off of their exports and the farmers jumped on that. So anyway, let's take a look at the cattle and look at some charts and bring these numbers together to make sense. So let's take a look at the timeline of what's happened with the cattle and what President Trump was trying to tweet out, but he did a lousy job of. So nonetheless, cattle market was moving higher early start of the year, a lot of volatility, a lot of events that was causing fits in the marketplace. But we peaked seasonally in early June when we have a tendency to sell off in the summer months on beef demand. But then lo and behold, President Trump steps in, got upset with them persecuting their former president, and he throws a 50% tariff on Brazilian beef, which is 27% of all of our imports. Now, keep in mind, it wasn't when you shut the tariffs off, it wouldn't have been a straight limit up feature because beef was still leaving Brazil, was en route. That was not going to get shut off completely and applied tariffs to. But as we move forward, tariffs were shutting it down to the point where today, believe it or not, we're still importing beef from Brazil, but it's down to like 7,000 metric tons, nothing like it was prior, like in January when we imported from Brazil, bear in mind, 90,000 metric tons. This will make sense when I get to the next screen. So anyway, it takes time, but it did cause this pinch into August 27th when seasonally our summer rallies, they stall out after for beef demand if there is any bounce, because the school procurement gets satisfied after people come back from Labor Day. Well, now they're not doing the hamburgers or steak cuts. They're pretty much chicken and pork. And then, of course, there's the restaurants that sell our beef. But anyway, back to not getting too off track. We went into a correction, went into kind of a pennant here for a while. And then lo and behold, we found that feeder cattle at the end of September was within 70 miles of the Texas border. And that took us vertical until last week, Thursday, when President Trump made his famous off-the-cuff announcement, well, I think we're going to help out Argentina, and beef is too high, and we're going to have it come off. Well, of course, that created a correction, which on live cattle sent it back to pretty much the channel line breakout point. But this is not where we're going to get into detail. This is where we're going to get into detail. Now, in 2024, all of our imports came to 2.2 million metric tons, all imports of beef from all places. In 2025, year to date, already with Brazil knocked back substantially, we're already at 2.4 million metric tons. Well, where does it come from? Brazil. Brazil last year in 2024, 145,000 metric tons. That's the whole year, okay? That's Brazil, but that's part of the 2.2 million metric ton number. Now, in Brazil, year to date, because we're still importing right now, 7,000 metric tons, off substantially from what has been well over 30,000 metric tons a month. January alone, monumental 90,000 metric tons. Actually, it was 89,000 for you nitpickers out there, but I'm rounding numbers out to make things easy. 90,000 metric tons in January, and we are year to date 260,000 metric tons. Now, to put this into perspective with Argentina, Argentina is a speck. Argentina works off of a quota system coming in. There were 20,000 metric tons back in 2024, when year to date, with the cutoff, Brazil has been importing 30,000 metric tons a month. This is a year from Argentina. Did you hear what I said? Year to date, Brazil is still, granted, down to 7,000 metric tons, but averaging 30,000 metric tons for each month. So they're talking about taking Argentina from 20,000 to 80,000 metric tons. Increase of 60,000 metric tons over a year. That's only 5,000 metric tons a month increase. Does this make sense? Yes, it takes the bloom off the cattle market. It likely sets the tone that a high may be in place, and it does set up a problem where index funds who are heavily long in here say to themselves, well, we don't know if we want to be here anymore. We want to take our money, maybe put it into cheap grain or something like that. And so they start exiting. But they're not that dumb. They're not going to sit and bury the market right away. But it does set up a situation where we have created, the top is in. Live cattle, before Trump made his comments, we said as long as we hold this valuation last week, a wave 4 was in place and we could go to a final fifth. Well, we had, in Elliott wave terms, a failed fifth. We're pretty much done for now. And corrections can occur on this cattle market. We can break, and we can look at trend lines here. The current close below 241 tells us this is it for now. The perception, the bloom, the optimism, well, it's kind of gone right now. And so setbacks, even though box beef holding up here, the cash market maybe hold steady. Liquidation in the December contract on the continuation chart could find some weakness here down into the 236, 235 range, and then maybe try to stabilize for a while. If we start breaking more on liquidation, well, then you start seeing the points of interest on our charts. Moving average, 232 here is a good number that could break to. Now, but the big one that's had the bloom taken out of, that's feeder cattle. And here too, we have failed fifths. Last week we said if we hold the top of wave 1, like we did, we get a fourth wave and get a bounce in here, we can still go on to new highs. Well, this pretty much got finished off, and you can see how after making those highs last week, President Trump's comments, every day is a lower high. The index funds are liquidating on this market. So now, to put this into perspective, let's just kind of blow it out. Here is the whole move from last fall's low when we broke into August, September, and we made this whole move higher where we have the counts and a failed fifth. You can start to see how these moving averages that are very viable, my blue one here, this one happens to be the 78-day moving average. Well, we can see how the 251 range, yeah, very possible. We can see some liquidation down to that 250 area. And this is the January contract, which is on the continuation chart. They want to get nasty, we can go to trend line support. You can see looking on this chart how this trend line also was quite a viable number. So if the funds are liquidating hard, near term, I think the 248, 249, 251 range, this is kind of as bad as it gets for now. You get an A wave down in the correction, then probably something to create a B wave bounce, and then ultimately later on, maybe the B wave bounce probably goes all the way into the winter as the feeder cattle supply is still going to be very tight. And then we get our C wave with Mexico, who spouted off yesterday morning that they hope to have the screwworm eradicated by the middle of 2026. Well, this could be the market anticipating later on that they do come. Well, then we start to realize that we get into the new year, we could be down at this major trend line support down near 320, and that would be in the new year here of February. This just kind of gives you an idea that, yes, we've likely seen a high. Yes, we are in an initial liquidation mode. Where does this want to stop? It could be here in the low 350 range, 349, then get some kind of winter bounce. If the funds get weird and wacky, yes, we could go trend line right away. In the near term, that would be then we'd break through 50, then we'd be on our way to the 340, what is this down here in the 340 range, 340, 339. So this is just to kind of give you perspective and understanding that this is not an implosion, but a liquidation is likely in place. You want implosion? President Trump is meeting up with President Lulu this next weekend at the APEC meeting in South Korea. And while or is it Seoul, South Korea, somewhere there. Nonetheless, if he was to get a deal with them and took those tariffs off, remember where that July 1st low was? Yeah, down here, 300, okay? That is what you have to be upset about. But then again, President Trump created this. He has the right to take it away. I'm not saying it's right. I'm not saying anything's right. But I am a little tired about hearing all the trade organizations that have to say something. They're out saying free market, free market, free market. Well, this wasn't free market. This was government intervention of a 50% tariff. We went up $30 in cattle. We went up $50 in the feeder cattle. Do not hate the messenger. Do not kill the messenger. We would like to do business with you. We do LRPs. We do options. I'm just trying to spell this out. Just the facts, Jack, so to speak, so we have a clear perception that, yes, The bloom is off for now. And unless things change again with President Trump, but let's just hope he doesn't pull the tariffs off of Brazil anytime soon. The video is not done. I still have more to go. But if you would like to get more information like this, morning texts of what's happening in the world, afternoon updates, scan the QR link that you see on the screen or click the link below, and that'll take you to our website, and go to heartlandinvest.com to sign up for a 30-day free trial of more information like this. So let's take a look at the grains. Corn moving up nicely. We had our wave 1, wave 2 pullback, which was shallow. 50% of the 50-day moving average held us, and now we're moving higher. Hints that China will maybe be a little amicable next week. Talk they may have purchased maybe over 1 million metric tons of beans here ahead of the meeting late next week, President Xi and President Trump. Can't be proven in the basis, but there's sure a lot of rumor talk. Wave 3 could take us up here. We got to get through the 200-day moving average on the continuation chart, which basically runs here about 430. Push that, we see a run probably the 435 range, minor pullback, but we ultimately are looking for a move up into that 445, mid-40 range on the December corn contract. If we can get something positive out of those meetings from President Trump, and the hope that maybe China will be looking at corn sometime early in the new year. And let's talk about the yields that are likely well below what the USDA said the last time. They probably built themselves some cushion by adding that 200 million bushels of corn added on the stocks number on September 30th, so they can dial things back. We shall see. Beans, we're liking the action, getting through the trend line resistance, pushing higher on those rumors. 78% retracement is at that 1048 range. They can't stop that there. Maybe that's where they stop them by tomorrow. We have option expiration. We've got a lot of shorts pinching out, a lot of short calls that probably thought they were going to collect their premiums from these values they never thought were going to ever be exceeded again, and now they are. So they're kind of pinching themselves out a little bit. But our target is for a run up to the 1075 range, especially if President Trump can get something together, at least on paper, with President Xi. And then this could give us some excitement into January, as they can step in December and January, buy a lot of beans to fill out. They're probably short about, some are saying as low as 6. I think it's in the 9 to 10 million metric ton category they'll need to buy. Plus, they like buying our beans for storing anyway. They're usually drier than what they get out of Brazil. On the crude oil chart, finally, big follow-up on yesterday. We had talked about how we were looking for a bounce. This arrow designates an expiration. And I said, look out, a bounce is in play. Just like that arrow was an expiration, that arrow was an expiration. We get these bounces, and I said, look for a bounce to 60. Well, they overshot it, so we have to change our count a little bit. Major resistance is this moving average resistance that we carry. It's a 77-day moving average. It's very viable. Everybody likes to pigeonhole things, 20-day, 50-day, 100-day. No, this is a 77-day exponential. You can see how it works. It gets spiked a little bit, like here's a spike when it's negative. When it's positive, look at here. Spike, but it still holds momentum. Well, we have downward momentum that can get spiked, so look to short the crude oil on the January contract, which is running $1 discount to the December. But December could, during this Russian chaos, which gets priced in pretty quick, could be maybe as high as 63 and a half. Go sell the December contract when you see that one come in place. And then we should be in a wave 3 to the downside, finish off a final 5 here of some kind. This is Eugene Grander with Heartland Investor Capital Management. Hope you find this information useful.